Most traders think they are both the same thing. They just tend to mark out lows and then write inducements, liquidity sweeps, depending on what their mood tells them, right? Well, most traders don't know the difference. So I'm here to clear that up. Liquidity sweep is when smart money takes out stop losses in the opposite direction of the actual trend before a continuation of the trend. Meanwhile, inducement is when the stop losses of retail traders are being hunted by smart money in the same direction as the trend, right? And that's one of the major differences. There's another. It Take a look at this. Market was forming higher highs, higher lows, right? And then this is internal structure. This is what it looks like on actual charts, right? And then it gives this internal change of character, which is the confirmation for most SMC traders. But then what you notice is the low didn't hold, and then it gets swept before it's moved. Why? Because smart money wants to buy, they want to buy huge share of the stocks, right? Or the coin or whatever assets it is they're trading. They want to buy it. And if they buy it with all the money they want to use to buy it, if they stack all the others at once, there's going to be an instability in the market and there won't be any sellers. They just push price up here. There won't be any sellers at this level. There won't be liquidity to get out of the market to actually take profit. So they need markets to move at a stable pace, right? And for that to happen, for for every buy order they place, they need a sell order that is going to absorb it in order to retain the stability of the market. So when they engineer this liquidity, right, they make markets give this internal change of character and then they sweep it. What happens? What happens when your buy order stop loss gets triggered? It's a sell order. It means you bought expensive and then you sold lower, which means you are at a loss. And as you are selling lower, smart money is buying lower. They are buying cheaper, hence maximizing their gains and maintaining market stability. That's liquidity sweep. In liquidity sweep, the retail traders in the actual market trend are the ones that suffer the losses, right? While in inducements, it is the retail traders that are actually going against the market that suffer the losses. That's one of the difference. Take a look at this, for example. Market is making higher highs, higher lows, right? And then this is the internal structure. If you go into the lower time frame, depending on your top down, you see markets give an internal change of character, but it's at the premium zone. Most SMC traders won't want to buy from this zone, so they'll avoid buying from here. And then smart money pushes price lower. What happens? Shorters think market has shifted character, right? Sellers, peers will now come into the market and be looking at this zone. This level will be their short POI, right? Market keeps pushing lower, and then it's giving them like a sort of a hide confirmation that market is going to trade lower. Then they now place their sell orders right above here. And then smart money buys from here aggressively and push price past this level. Like I said, for every buy order, they need a sell order to be filled, right? And what happens? There are sell orders here. They will not take them, absorb them, and then move market at a stable pace while hitting retail traders stop losses, raking base. So this is a major difference between liquidity sweep and inducement. A liquidity sweep is a hunt of an existing liquidity, right? Market is bullish, buyers are stepping in, and then smart money hunts the buyers stop losses anyways. That's liquidity sweep. While inducement is hunting the stop losses of retail traders going against the market. And inducement means inducing traders into the market when they should not be in the market, right? BS shouldn't be in this trend at all. But then smart money induced them, trapped them to think the market is going lower, and then they got wrecked. I hope you understood it. Good night.